Hello everyone, it's Wednesday, May 27, and today we will analyze the charts for the euro and the British pound to identify potential market trends. Yesterday, both the European and British currencies tipped against the US dollar, but remains within the broader sideways ranges. Pessimistic sentiment was fueled by another surge in geopolitical tensions. The Middle East conflict escalated after Washington launched new strikes on Iran, prompting Tehran to destroy several US drones in retaliation. As a result, Iran accused the United States of violating a fragile ceasefire, putting negotiations between the two sides on the brink of collapse. Nonetheless, the proposed peace agreement, which has been under discussion since last weekend, remains active. While it has not yet been finalized, there are still a 50-50 chances of success. Notably, the potential deal includes the immediate release of 12 billion USD in frozen Iranian assets, a complete lifting of the blockade in the Strait of Hormuz within 30 days, and a 60-day ceasefire with the option for extension. However, a key condition for reaching the agreement is Tehran's demand that Israel cease its strikes on Lebanon, a request that Jerusalem seems reluctant to honor. Just yesterday, Israel conducted more than 120 airstrikes on Lebanon, resulting in numerous casualties and injuries. Therefore, a peaceful resolution in the near term appears unlikely without significant pressure from the United States. Shifting to fundamental statistics, yesterday's macroeconomic calendar featured no major news releases, and today is expected to be similar. During the European session, traders may pay attention to data regarding the total number of job seekers in France. In the US, investor focus will be on the weekly ADP report, which provides insights into changes in private sector employment, as well as the Richmond Federal Reserve's Manufacturing Index and speeches by Fed officials Lisa Cook and Lori Logan. Their statements will be particularly significant following the appointment of the new Fed chair, who intends to reduce the number of news conferences. Consequently, policymakers are likely to be a central focus for market participants, looking for a guidance on the future direction of the central bank's policy. Turning to technical analysis, the 1-hour chart indicates that the EUR/USD is currently trading near the upper boundary of its sideways channel. A decline followed by a false breakout at 1.1632 would trigger a buy signal, potentially driving the euro up to 16.59. A break in consolidation above this level would push the pair to 16.78, which might pave the way to 16.98. At this level, I would recommend going short on the rebound, targeting an intraday correction of 15-20 pips. Sell entries at 16.59 and 16.78 should be considered only on the false breakout. However, a return to these levels will be possible only in the event of a positive developments in the Middle East, as today's macroeconomic calendar is relatively light. If the price dips back to 16.32 and holds below this level, it would be prudent to consider short positions, potentially dragging the euro down to 16.09 and possibly reaching 1.1585. At this level, traders are advised to go long on a rebound, targeting a move of 20-25 pips. Long positions at 16.09 and 16.32 should only be taken after observing a false breakout. Speaking of the British pound, as shown on the chart, it has experienced greater losses compared to the euro. Currently, the focus is on the 1.3427 level. With no significant news releases from the UK scheduled for today, bullish traders may take the opportunity to act. A false breakout at 34.27 could present a buying opportunity, targeting a rise to 1.3466, where selling pressure is expected to resume. If selling activity is muted, a break in consolidation above this level would generate a buy signal, allowing sterling to climb to 1.3503 with the potential to extend gains to 35.29, a one-week high. At this level, I would recommend considering short positions on the rebound, targeting an intraday correction of 25 pips. Short entries at 35.03 and 34.66 should only be considered following a false breakout. Conversely, if there is a gain in early trading followed by a bearish reversal, traders could look to sell the pair, anticipating a decline to 34.27. And break and hold below this level would pull sterling back down to 33.93, with the possibility of further losses extending to 33.44. At this level, it would be wise to consider long positions on the rebound, targeting a move of 30-35 pips. Buy entries at 33.93 and 34.27 should only be evaluated after a false breakout. Best of luck to everyone.